Well, good morning, traders and investors. Today is January 20th. It's the day that Biden takes office. The futures markets are up quite a bit. The NASDAQ is up a lot, which is kind of surprising because, NASDAQ, large cap stocks, Biden administration, there could be some tension there, but they are higher. We're going to get into earnings season. Earnings season is on the plate right now. As you will see here, earnings over the next 7 days, we're starting out with bank stocks for the most part. I mean, it is mixed, but you got a lot of financials. Discover Financial, U.S. Bancorp, Citizen Financial Bank. By the end of this week, we're going to get a good idea where financials stand. So far, investment banks like Goldman Sachs are doing better than expected. Morgan Stanley's doing better than expected. Discover Financial Services should be doing better than expected. While banks that are savings and loan types are not doing well, like Bank of America, Chase, Wells Fargo. Those are not doing well. They don't have an institutional trading division. So again, that's going to be the biggest factor. And as the week progresses, I'll be giving you summaries on where we are. It's just kind of a little too early. And I gave broad expectations in the video yesterday. If you haven't seen it, check it out. But I talked about earnings for about 12, 13 minutes in yesterday's video. Now, what I wanted to do, I wanted to show you a couple of things. First of all, this is the put to call ratio. And as you can see here, notice the highs are getting lower. Notice, look at the highs. This high, this high, this high, this high. The highs are getting lower and the lows are getting lower, or at least moving sideways. That's the put to call ratio. And this tells us how bullish or bearish market sentiment is. And right now the market is extremely bullish, a little over bullish. And when the sentiment goes down to 60, below 70, 69, 60, around these levels, let me go a little further back. This is, let me go back 9 months. And let me expand the chart a little bit so it doesn't look all squashed, so you can kind of see what I'm talking about. All right, typically, 90% of the time, this indicator is completely neutral. It's like a rubber band. It goes back and forth, back and forth, back and forth. But, right now, it's tending to, or it seems to be focused on the bulls. And that means it's stretched out. So it's a rubber band. It always stretches and pulls back, stretches and pulls back. But sometimes it gets out of whack. And right now it looks like, see this right here? That's out of whack. This is out of whack. This is looking like it's starting to get stretched out. And right now, when it goes below 70, that means call buyers are running rampant. When it gets above 110, that means put buying is getting rampant. Right now, as you could see here, there's a lot of call buying. Market is exuberant right now, extremely exuberant. And when you look at that in light with the S&P, I just kind of want to show you the broad market so you see what I'm talking about. Look at the trend. It's been going up. But if you look at momentum levels, let me get rid of these bands here. If you look at the relative strength index, the RSI, and I like to put it on 10-day, not 14, which is the standard setting, you will see, let me just dump this line here. I don't even know why it's here. You will see the highs can't generate this level of momentum, and that's divergence. So you've got lower highs, higher highs. Momentum levels can't generate sustainable momentum levels even at these levels. And you've got put to call ratio telling us that the market is stretched out. And in addition to that, you've got momentum levels. Let me show you this. This is all stocks trading above $2. Look at the number of stocks trading above, percentage of stocks trading above the 50-day moving average. 82%. Last month, last week. This is an overbought market. And look at the number of stocks above the 200-day moving average. 88%, 87%, 87%. That's an overbought market. And this is confirming that that's the case. And I think the odds are strong that we're going to even go lower, and that rubber band is going to get really, really wide. So you've got to be really, really careful. I don't know if we're near the top right now or the short-term top before we cool off, but markets are getting increasingly stretched out. And the more stretched out they get, the harder it will be for them to generate upside momentum, and the easier, pay attention, and the easier it will be for them to snap back, that rubber band to snap back. Remember, that rubber band goes back and forth, and most of the time it's random. But again, when it goes to 0.70, 0.69, or 0.110, that's when you have to look out for. You have to look for the outliers here. You have to look for the wide range. You have to look for anything below 70 or anything above 110, and we're getting into that zone. Now, what I want to do right now really quick is I want to show you where the money is moving into for the S&P 500, for the NASDAQ 100, and for the small caps. So you have a good idea of where funds are putting their money right now. So let's start with the S&P 500. Very, very simple. Retail and basic materials. Look at Freeport McMoran, FCX. Look at Albemarle, ALB. Albemarle Lithium. This is a lithium production company. This is copper, and this is lithium right here. FCX is copper. This is lithium. L Brands. Clothing. Coach. Clothing. Kohl's. Clothing. Financials, I would be careful. I would give them a little more time. They are moving higher. So if you want to do it that way, we've got natural resources, clothing, and we've got financials. If you're going to look at financials, focus on financial companies like Discover that don't have a lot of business dealings, or consumer credit cards, or anything dealing with business right now isn't ready to go. But what I am seeing upside for is consumer, clothing, natural resources, and to a smaller degree, financials. That's the S&P 500. Now let's look at the NASDAQ 100. Again, my job here is to tell you where the money flow is moving into right now. For the NASDAQ 100, we've got international companies that have exposure to international tech, like Beidou, for example, China, like NXP Semiconductors, like Micron, like Mercado Libre. Meli is a Latin South American e-commerce site. Beidou, Chinese e-commerce. So foreign e-commerce, that's right, foreign e-commerce and chip stocks. I told you guys a week ago, chip stocks are hot. Look at this. Applied Materials, Lam Research, Micron, KLA, Qualcomm, Maxim, NXP, Microchip, and so on and so on. But look at what else we have here. We've got Beidou, foreign company with e-commerce. We've got Mercado Libre, foreign company with e-commerce. We got JD, Chinese company with e-commerce. So I would focus on foreign companies that deal with e-commerce and semiconductors. And boy, oh boy, we've got some great Applied Material, Lam Research, Micron, KLA, Qualcomm, Maxim, NXP, Microchip. I mean, they're just analog devices. They're everywhere. But that's what I would focus on if you're going to be going into the NASDAQ 100. Foreign financial companies like e-commerce sites, China, South America, or semiconductors. And semiconductors are international. And now, let me give you the same type of breakdown for the Russell 2000. I figured since it's the inauguration day, you guys got to be prepared. So I want to show you where the money is. And now with small cap stocks, disruptive technology, we're kind of a little bit all over the place, but if I was going to focus in a few, I would focus in on biotech and alternate energy, like SunPower Corporation, clean energy fuels, clean energy, biotech, and disruptive technology. Companies that are doing something totally different. But again, look at the Sandridge Energy. So look at energy, and you may find some traditional energy companies moving higher too right now. My advice is stay calm and wait and be patient. And if you're going to look at a traditional energy company, listen carefully with what I'm going to tell you. Make sure the company took out February 2nd high. Let me show you what I'm talking about. February 2020 high. This is the energy sector. All right, it's bullish right now. I want to show you this. This is the, let me show you this high. Let me go higher here. Yeah, here you go. This is February of last year. Look at where February of last year price action is, and look at where traditional energy is. We're not there yet. So I would wait for traditional energy, or only buy traditional energy companies that are trading above the February high. If they're not doing it, I wouldn't do it. So again, S&P 500, what do we got? Let's go through this real quick. S&P, we've got We've got foreign stocks. We've got natural resources, foreign natural resources. We've got financials, and we've got retail. NASDAQ 100, we've got semiconductors, right? Semiconductors, very, very important. And foreign financial stocks, again. And in terms of the Russell 2000, we've got biotech, we've got alternate energy, and disruptive tech. And now, before I get going, I got something important for you. What I'm about to tell you, folks, is top secret. Don't share this with anyone. Most people don't know this, but there's a secret calendar that reveals the exact date certain stocks on Wall Street are going up every year. I'm serious. This mysterious calendar has spotted a new stock every single week. Once triggered, pops like clockwork. Folks, this is so accurate. You could set your clock to it, watch your trades shoot to the moon, regardless of what's going on with the rest of the stock market. And right now, I mean right now, we're giving you access to this calendar. And the man behind it, absolutely free, no cost. Click on the link below. Check out the secret calendar for yourself. Do it now. You're going to love this. I'm telling you, this is something most people do not know about. It's a secret calendar that reveals the exact date certain stocks on Wall Street pop. That's all I'm going to tell you. You got to check it out. Follow the link below. Learn all about it now.